Good morning, traders. This is Michael coming to you from Game Edge on Tuesday, July 15th with our pre-market prep session. We always start with our three pillars here at Game Edge: sentiment, structure, and trend. Again, currently looking at our market trend model, which is based on the tick index. You can research that at your favorite investing website. But the quick takeaway is it is buying versus selling in the overall market. Yesterday, pre-market prep, go back and review that quick video. We discussed the weakness within the overall bolded white line. This is our cumulative tick or intraday instantaneous CT. And we discussed the weakness under the shorter term moving averages, and we wanted to see this cross back up. Those shorter term moving averages indicating that the buyers were continuing to take back control of the overall market, which we saw really roughly around 1 o'clock yesterday, crossing back to the upside, giving us some signals to go long the overall market. And then you see the cumulative tick up here crossing above zero back to the upside. Our filtered cumulative tick, which is the block orders plus 1,000 minus 1,000, was fairly flat for the day, indicating that overall institutions and larger market participants were not as involved. But then our breadth indicator, new highs versus new lows, more stocks were being accumulated and bought, being sold. So again, on a short-term time frame, being long the overall market was the correct play. So again, our colored ribbon, this is our longer-term look-back period. Again, this is how we position our money for longer-term trends. The red is above the cyan and continues in a positive slope to the upside. So really no change there. So what we look for today is let's see if this bolded white CT can go into a linear up type fashion. A 45-degree angle to the upside, indicating we have a significant amount of accumulation or buyers coming into the overall market. So we'll continue to watch that intraday as well as day over day. But the overall picture is still bullish, just in a longer term uptrend with some consolidations and pullbacks so far. Moving on the SPXA, this obviously is our cruise ship, longer term contract expiries. Obviously, we have a monthly OPEX coming up. But again, really no change here. We're call dominated above and below spot price. Green really as far as the eye can see in the net delta column. So call speculators are in full control. If you scroll up on this, up towards 6,500 is actually our PGX level. So again, call speculators are speculating all the way up towards 6,500 from larger market participants. So we'll see what happens after this OPEX and see where that money gets repositioned. But we're theorizing that we're going to maintain this call dominated state after OPEX well on into the Q3, Q4 timeframe. So again, any pullback in the overall market is an opportunity to get involved as of now due to this call dominated bullish call speculators maintaining control structure so far. So moving on to the SPXP, these are our speedboats. Obviously, these contracts turn over more rapidly as indicated by the purple tiles over here. Call dominated above and below spot price. Decent amount of net GEX there, almost 40,000. Again, expected move 0.91, so 57 points. Spot price here at 62.70. We see the upside speculation 6,300. And then all the way up towards 6,350, 6,400, and even up towards 6,500 on the all expiries here. Any pullback, again, is an opportunity to get involved in the market. You see in the money calls below us, obviously down towards 6,250. Even a pullback all the way down towards 6,200 is still constructive within this overall structure, as you'll see here in a minute on 0DTE. But full complex, any pullback is an opportunity to get involved as long as our overall sentiment and structure and trend stay intact. Moving on to the GEX ratio, we've been discussing this really the past few days to weeks. Yesterday we went over it. It was GEX ratio. The dotted red line was actually in a negative slope, but now we pulled it up and we flattened it out. So we said this would resolve. We've had a divergence with spot price rising and the GEX ratio dropping. Our GEX ratio is based on a put call ratio, but we add a time component, so it's much better. It's gamma, and then obviously we're just talking about the divergence, but now we're flattening out again. So this is again indicating that call speculators are at least maintaining control and then possibly looking for upside. This is shorter dated call gamma going into the overall complex. And again, this is spot price sensitive. So as spot price moves up, we can capture a significant amount more of those out of the money calls become in the money, changing the overall ratio. So again, we'll watch this for any sort of divergence. Right now, Obviously, spot price is just consolidating and trying to move back to the upside. So we'd like to see this start spiking up towards the 2 level, indicating out of the money call speculators are coming in the complex, and that should translate to a price appreciation via SPX. Moving on to the delta balance. Again, this is based on the overall structure, option structure, and we separate it via the right-hand plane and left-hand plane. You can see we've been really discussing that the right-hand plane and the left-hand plane of just maintaining their overall states. So right-hand plane is above spot price. This indicates out of the money call speculation. It was dropping a little bit heading into this week, and then into Wednesday we're discussing possibly some weakness. The left-hand plane, this is in the money calls. Obviously, as spot price rises, we capture some more out of the money calls driving those in the money. So this would, obviously have a more positive slope. But our delta balance overall, when you aggregate these two, is maintaining at 1 and being pegged at 1 for the rest of the week. So that just continues to indicate that call speculators are maintaining control through Friday. So really not seeing any appreciable weakness or change in the overall structure through Wednesday. We've already had CPI, and then we have PPI and Vixpiration on Wednesday. So we'll continue to watch this projection to see if this changes any day over day. And moving on the SPX P0 DTE, obviously this is our structure for today. I outlined the drunken sailor range here. You could easily capture the drunken sailor range all the way up towards 62.85 to 62.90. I just went with these a little bit lower exposure contracts here. You could even drop this down towards 62.25. But again, you'll be at the mercy of the vol-am, intraday volume metrics, intraday volume speculators. So that's why we watch our vol-am command intraday. But again, weakness or a lower exposure area around this overall transition. So yesterday we opened with inside the transition, chopped around really most of the day, and then we started moving above the transition and traversing up towards that 62.75, 62.80. We've already tapped 62.90, 6300 pre-market. You can see that's our PGEX area. Historically, that's an area where you will see some profit taking. We do see COTMC all the way up here at 63.30, so we have an opportunity if we get above 6300 to move up towards that area of out of the money call speculation, driving through 6300 as you see here, up towards that 63.30 level in COTMC. That's why I've drawn the green arrow here. And we actually have COI. This is the highest call open interest for today, all the way up at 63.50. I don't think that's achievable or attainable, but we'll continue to watch the vol-am command. Obviously, if we have a significant amount of out of the money call speculation come in and we actually get above 6300, driving up towards that 63.30, then 63.50 would be the next level. To the downside, obviously, we'd be within the overall drunken sailor range. Transitions unambiguous, very narrow, 62, 60, 65. If we get below that, obviously, we'd look for some more weakness down toward the bottom of the drunken sailor range, and we have index down here at 62.25. That'd be the first stop to the downside we'd look for. If we're below 62.25, you see this kind of double strike down here at 6200 and 6205. Again, that would be an area that we would look for some stalling and most likely demand, and we'd look for a bounce into that area, and that would be a good area to get involved again on the long side, as long as the overall structure and NTM is looking still constructive. But again, not really anticipating that we drive down towards 6200 unless we see a significant change in sentiment and structure. And then our vol-am command would have to have two centroids with negative slopes to the downside. So we'll continue to watch that. Let's look at pre-market. So pre-market price here, 62.96. Again, 6300 is going to be that kind of area to get above, and then we could see some rapid price appreciation to the upside, depending on what the intraday vol-am command. Of note, pre-market, we're already reaching plus GEX on QQQ, which is 560. So again, that's an area historically where we would see some overall profit taking in our mechanical portfolio, our P-Trans to PGEX portfolio. We would be exiting positions with a close above PGEX. So we'll watch this to see if it updates after our first opening OI update to see if this plus GEX moves up. That would be indicating significant more bullishness within the overall structure as the structure would advance up. So we'll continue to watch that. SPY, obviously plus GEX level 630, so it's only 3 points above us. We'd have to get through the pre-market high. That'd be the first area that we would look for target areas installing, and then a pullback down towards the P-trans and COTMP level would be a good area to get involved. IWM above P-trans pre-market here, 222. And then we see a COTMC and plus GEX up at 230. So those would be the first areas above we'd watch for some overall profit taking and stalling. So again, at the open, we'll just try to be patient with our 0DT trades, watching 6,300 to the upside. Again, if we continue to get failed up there, it may be an opportunistic short. It'd be very quick. Just an overall strong market with the market trend model as well as the structure. So that I think that would be a difficult area to short. Obviously, we see our drunken sailor range was up there at 6,290 and 6,300 also. So the confirmed long would be above 6,300, start targeting the above levels above that. And then the pullback obviously would be down towards the bottom of drunken sailor range that we would watch for. So that's pretty much the game plan for today. If anybody has any single stocks they want to go over, many of the single stocks, call dominated, structure keeps advancing, just a super strong market. Overall, really no reason to be on the short side. We discussed that on our open mic with our members on Sunday night. There's just no reason to continue to try to short all-time highs just with this structure and sentiment and trend. If we start seeing that change, we'll see a change in the overall option structure, and we'll see a change in our market trend model, and we'll adapt to those changes. But as of now, just everything looks strong to the upside, unless we have some news event come out or some change in the overall sentiment, but really not seeing that. So again, every pullback is an opportunity to get involved. We've been preaching that for the past few weeks with this overall structure. And then again, if that changes, we'll start to see it within our tools, and we'll see it very rapidly as call speculators will start to leave the overall complex, and you'll start to see out of the money put speculation come in. But as of now, that is not occurring. So hopefully that helps everybody. Thanks for joining us this morning. I'll hang around for a couple minutes. If anybody wants to go over any single stocks, make sure you check out our post on X, as well as sign up for YouTube, and you'll be notified anytime we go live. But we'll intraday, we'll provide some updates if we see anything change or any notable for any single stocks. But as of now, everything is call dominated, and call speculators are maintaining control, and 6,300 is that first overall area to get above. So thanks everybody.